go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, Alexandros Christodoulakis. He is the CEO and co-founder of Wealthyhood. Alex, welcome to the pod.
Thanks for having me, Rocco. It's a pleasure to be here today.
Alex, what I wanted to talk to you today was your motivation to leave what many would call a cushy financial institution, a nice job, to go and work at a startup or to find a startup. What, like, people would say, what's wrong with you? Like, why would you do that? Talk to me about your thought process.
Yeah, so I've been through this one a lot. People still keep giving me the what did you do and by the time I was a trading strategist at Morgan Stanley, it was my first official job in financial services. I was very happy in the first 3 weeks, but then on I always knew it wasn't my thing.
So 3 weeks, sorry, but I was very happy. People would say, I was very happy for the first 3 years. I was very happy for the first 3 weeks. I think that speaks to your personality, and I think it speaks to sort of that go-getting attitude. Am I right?
That's exactly right. So just to clarify, I was very keen on finding this job. I wasn't lucky. I applied to like 100 different jobs and worked hard for this one. So I was really focused on one, but then I soon realized it wasn't my thing. The problem was that in a huge organization like Morgan Stanley or the largest investment banks, you're just a tiny piece of the whole process. Especially in the very beginning, you barely see the impact of whatever you do. So you may do one model, another algorithm. You never see how this may impact the whole firm. And this is catastrophic for a young individual who has a key motivation to rule the world or to dominate something. So from the first month, I knew this was my role there. I was going to be a small part, and I didn't like it. I stayed for over a year, but I always knew I was going to leave. I would stay for a bit to get some extra money for my first startup, but that was it. It was a very easy process. The hardest thing was just to tell my team that I'm leaving. That was the hardest thing.
Okay. And this Wealthyhood was born, right? So it sounds like you always knew it was going to be something. How did you know this was the direction that you want to go on? And what for the listeners that maybe might not know what Wealthyhood is, talk us a bit through it.
Yeah, just a small notice. When I resigned together with Kostas from Morgan Stanley to found the company, it wasn't Wealthyhood. So we started from another company.
Oh, you pivoted.
It was Data.
Okay.
Yeah, exactly. It was an investment platform for private assets, hedge funds, private equity. So we worked for about a year on this one. It was very wrong. We did every potential mistake I found. But this led to huge aggregated experience in just a few months. So it failed, but we soon realized it and pivoted to what today we call Wetfood. So to answer your question, after a while, we were trying to pitch alternative investments to retail investors. So this was the value proposition of the first company. We were trying to say that you guys need to invest 20% of your assets into market neutral funds with low correlation and all that stuff, We soon realized people had no idea about what to do with the rest 80% of their money, their main portfolio, their mainstream assets. And it was getting bigger and bigger. The problem was huge. And then we started doing individual calls to advise them on how to construct the rest portfolio so that we could sell the 20% alternatives. And then there was this moment, the aha moment, okay, this is huge. Why don't we focus on this part of the market? Okay. And then we started thinking a bit more and more and more. And we found out that people can only use trading apps to trade their money if they want to do it on their own. If you trade your money with your trading apps, essentially you gamble the stock markets. These guys won't use more and more and more. They want you to be active. And the worst thing you can do if you are an individual, a beginner, less sophisticated investor is actually trading money. You're going to lose your money. 80% of them lose their money in the first year.
Yeah. Well, I mean, if this year taught anyone everything, it's a bad idea to quit your job and go into trading, because 2021 made it look very easy, and then people got a reality check. Talk to me about the community that you are building at Wealthyhood, because that's something that I've seen you guys are very passionate about, and growing a small team and getting people to be brand ambassadors for you guys. How is that going for you?
Exactly. So we knew from the very beginning that we needed to educate people about long-term investing. So the fifth I mentioned before, don't gamble, invest for the long term.
Yes, education. That's number one.
You're absolutely right. So we could do that. One way was me going out there and discussing with everyone, or we could grow our community and make them ambassadors of our. So in the very beginning, we had a dedicated person in-house, community manager, and we onboarded about 50 ambassadors. This was even in the first 2 months, even before we launched our website. So we quickly onboarded 50 ambassadors. These guys were presidents of investment societies and universities in the UK and Europe. So very decent guys. We persuaded them about the importance of our vision, and they joined us as ambassadors. To be honest, the first 1,000 early signups in our waiting list came only from the ambassadors. Very, very small team. And when we thought, okay, this should scale. So we have been very active on social media, especially on LinkedIn, where we thought there's a huge mass audience out there that needs to be educated and participate within that. So we tried posting, we tried engaging with the community, we tried direct messaging people who reacted to our posts and everything. So very soon we reached our company page with a few thousand, 5,000 or 7,000 followers. So this is our very important LinkedIn community. It's very important due to the engagement, because it is very engaged. So this was phase number 2.
Okay.
Phase 3 is what we recently launched. So we tried to make it more systematic. Is what we call growth interns. So these guys are university students, and they are our way to embrace this message within the campuses. So we're more active, we're putting them into teams, they work together as growth interns. We continuously guide them with information and material on how to discuss and how to promote the company, the vision, and our investment principles. And these guys are more dedicated, are more like the Wealthyhood army within the university. So this is number 3 that we're rolling out today.
Okay. So talk to me about your onboarding process a bit, because a lot of things that I see from these large institutions is I sign up and then sort of I try to rummage through everything. Then I'm just left with this feeling of, okay, what now? You hear what I'm saying? What is the Wealthyhood onboarding process like?
You mean the product onboarding process? On the
yes, because I'm assuming, like, let's say you listen to this pod, you like the sound of, whatever, and then you want to go out, check out Wealthyhood. What can someone expect? Yeah.
Exactly. So we try to make it as easy as possible. So we have broken down in a very few steps, a very easy portfolio construction process. So we start by asking a few questions, filtering your portfolio. So we ask you which asset class you want to include in your portfolio. So you may want to include stocks, government, corporate bonds, commodities, or real estate. Next, if you don't know what it means, we make sure to explain while you use the app. So it's very simple. Next, use which geography you want to invest in. So you may want to invest in a global portfolio, a US portfolio, or something different. Then we ask you which investment sectors or industries you want to focus in. For example, you may want to focus on technology. I want to include biotech, clean energy, and all the rest. Okay. So until now, very easy. If someone doesn't know the answers, it's better for them to stay away from the markets. But it's very easy for 90% of the population out there to go and answer it. Then we ask about your risk level, and we optimize portfolio for you. So we provide a portfolio template, which is a starting point. But we don't stop there. DIY. Give it to you, and we allow you to change it as much as you want. So you can decrease the allocation in some ETFs, add or remove some assets entirely. So it's up to you, and we try to guide you through your journey. After that, you invest, and then our automated tools help you invest over time systematically.
Okay, so I started doing my research for this podcast last year when I checked out Wealthyhood. At that stage, it was only available in the UK. Is that still the case? And if it is, do you guys have any plans to expand to other continents?
Yeah, unfortunately, this is still the case. So we're only available to UK residents by now, but we plan to expand to the European Union by the end of the year, ideally beginning of Q4. So the EU is a critical milestone for us. Okay.
Before I let you leave, I want to talk about the future of retail investing and where do you see it's going? Because for me, it's we haven't even gotten started, right? Because the term retail investor is so new that we don't even have that 5, 15, 20-year time horizon to say, okay, cool, this is what we're dealing with. So, all right. We've just started. People are starting to call themselves retail investors. Emphasize this is not day to day. This is not even week or month to month. This is a long time horizon. This is 5, 10, 15, 20 years. Where do you see the future going for people who want to manage their own funds?
So, as you said, Rocco, we saw the democratization of access to the stock market like 7 or 8 years ago when the trading apps came to bring commission-free investment. It was very important. Everyone can now buy stocks cheaply in the stock market through these apps. The problem now is that it has gone crazy. So everybody, you see the events of last year, GameStop and all the rest, everybody was getting a millionaire overnight. So you could see these success stories. It went crazy. And all these trading apps wanted you to trade more and wanted you to on this craziness. So you had all the wrong incentives to actually trade the markets. People ended up gambling. So the way I see it from now on and over the, 5 or 10 years to come, is that we want to see a rationalization of this retail investing landscape. So if you were a millionaire, Rocco, nobody will tell you, okay, buy call options in this individual stock, you'll become a billionaire by next week. Nobody will tell you that. Why should a retail investor do that on money? So the way I see it, we should expect to see more of this rationalization coming into play over the next few years, and we're going to see apps focusing on this end of the spectrum. People are now beginning to become more educated about long-term investing. They have lost their money probably in some occasions, and they now want to grow their wealth in a safest way possible. So it's one thing to gamble with 5% of your money. It's another thing to grow your wealth with the 90% of your money. Some other trends is that we see much more personalization. So you, as mentioned before, you want to invest in biotech. I want to invest in banks. Everyone is different. And from now on, all the investing experience will be different and focused in our individual preferences. We also see a huge shift to ESG investing and social impact. With all these events nowadays, everyone wants to make sure that their money is in the right place. They don't support wars, they don't support drugs, they don't support money laundering or any other and they respect the environment. This is now commoditized. Investing apps and investment firms have no excuse other than to follow the path and respect the preferences of individuals. And I would say we'll keep seeing this millennial breed of investors, which is very different to the previous generation. It's self-directed, they want to have control, they don't necessarily have all that respect for traditional institutions, and all these guys are used to a very different experience. They use Netflix, they use Spotify, they use Amazon. A very different game. The investing type of our parents or grandparents is now over. We're shifting the wealth to the millennials and the Gen Z. Millennials will control $20 trillion in assets by 2030, and they will bring all this different philosophy and mentality to the way they invest. So this is how I see it developing over the next 10 years.
Well, Alex, more power to the people. Thank you so much for joining me today. If the listeners want to go and check you out, where can they do it? We'll drop your links to the socials. Anyway.
Yeah, it's just wetfood.com to get access to Wealthyhood web platform from now. The app will be launched in about a month from now. If you have any questions, just reach out on LinkedIn or the rest. Thank you very much for having me.
Thank you so much. And to our listeners, peace, love, and prosperity. And we'll catch you in the next one. Cheers.